Good afternoon, everybody. Welcome, welcome. Welcome, welcome. Hopefully everyone had an awesome weekend. I hope all of you got to spend some time with the family, friends, whatever you do on the weekends to relax, and came back on Monday ready to rock and roll. Definitely an interesting day of movement and plenty of things jumping around, that's for sure. Quite a few opportunities today as long as you stuck with it, but before we jump into all the fun stuff, make sure to swing on over to slingshotfutures.com and look for the newsletter registration option towards the top there. That's where you're going to be able to register for email newsletter list, and in that email, that's where we talk about a bunch of stuff that we just don't have time to talk about in the live stream. That's going to be everything from stocks, options, crypto, you name it. If it's moving, it'll show up in that newsletter. So make sure to sign up for that so you don't miss anything important. Of course, along with that, just to the left of that, we have the 3-day trial, and that is where you can sign up for our free 3-day trial. You can hang out with us for a couple days in the room and really just kind of get a feel for what we do, how we approach the markets, how we analyze the markets, how we trade the markets, etc. It's a really great way to get your feet a little bit wet, ask some questions, have some fun with us, and overall get a good inside view into what we're doing. Now, taking a look at the news, first off, the news for tomorrow is relatively sparse. Now, you'll notice one big thing, there are no U.S. news announcements for tomorrow. The news that we do have for tomorrow is early in the morning out of Germany. That is the manufacturing PMI for Germany out of for July, rather, forecasted for 55.5. Along with that, at 21:30 in the afternoon out of Australia, we have the CPI for Q2, forecasted at 0.5%. So relatively sparse in terms of the news, not necessarily a bad thing per se, but it is always kind of nice to have something to keep the markets moving. Now, in terms of news, kind of not announced news in the sense of an expected release, but we do have President Trump on Twitter. I was going to say the microphone, but on Twitter, sending basically warning shots over to the president of Iran, and things can get a little bit shaky when that kind of stuff happens. So just got to be a little bit careful in terms of what all is going on around the world geopolitically. But in terms of news announcements for tomorrow, we really don't have anything to worry about. Over on the earnings side of things, later today, we have earnings coming out of Google. Definitely going to be a big one. Google is a big mover and likely going to have a large impact on markets like the NASDAQ when those earnings come out. They are anticipating $9.51 out of Alphabet for that earning, and they're looking at launching that at 4 p.m. So make sure to stay tuned for that. We do have TD Ameritrade, AMTD, coming out at 4 o'clock as well, estimated 79 cents. We have Steel Dynamics estimated at $1.49, Whirlpool estimated 363, Crane at $1.35, Zion at 92 cents, and then just keep going down the list. We got a decent amount of big names coming out. The one that I'm obviously interested in is going to be Google. That's going to be a big one. Probably not one that I'm going to trade because Google is, well, it's a little bit expensive. It's out of my price range when it comes to stocks. I prefer slightly cheaper stocks, but either way, it might be a very interesting play, maybe for options if you want to pick up a cheaper way. TD Ameritrade will also be an interesting one because I do use their service, so I always find it interesting, even if I'm not going to trade it, to kind of see how those things come out. And then along with that, Whirlpool can definitely be a mover as well. Earnings for tomorrow, certainly not over. It is earnings season after all. We've got earnings out of Lockheed Martin tomorrow morning at 7:30, 3M at 7:30 as well. Now, Lockheed Martin is estimated $3.89. 3M is estimated at $2.59. We have Verizon coming out with an estimate of $1.14. Kimberly-Clark at $1.60. Biogen at $5.22. We've got a lot of names on the calendar, so it's anticipated to be, well, pretty volatile on those specific stocks, and hopefully that volatility that comes in across those bigger names will draw over into the indexes and kind of get them bumping around as well. No IPOs scheduled for tomorrow. The next IPO, actually 2 IPOs, is scheduled for the 25th, so on Wednesday is when the next IPOs are scheduled to launch, so nothing to worry about there. Now, over on the markets here, let's start off with the euro on a 4-hour chart here. Now, the euro is very range-bound. It's not really doing much of anything, really. It's trying to get going in one direction, fails. Tries going the other way, fails. It's just falling flat on its face over and over again. And when we zoom in a little bit closer here, really the big thing that stands out for the euro was this line in the sand that we had from last week. That was that swing gap area. They tried testing it, held as resistance, but they made that higher low, and now they have broken back higher. So what I'm looking for now that we have kind of gotten out of that area, that kind of chop zone, is utilizing that as support now. We held it as resistance multiple times, and we have every reason to believe that when it comes back to it, it's going to hold it as support. And we can already see the buyers arguably fighting over it as it comes close. It's not even testing yet, and we're already seeing buy pushes back when it nears this area. So I am looking for support to come in between 17, let's say 17,330 down to around 17,120s. And that's going to be the area of interest to kind of look for potential reversals back to the upside here going into tomorrow's trading. Overall, we are in a range. I mean, it's pretty plain as day. The market's not really getting anything going, and we're finding a lot of support off of that 16, we'll just say 16,200s, kind of right in the middle there. And now the question is this going to be a range in the sense that it breaks out of the initial range over here, which is what we're cycling off of, or is this going to be a fake out, find some sellers to push the market down, and then shove it right in their face to try to break out through the highs for a larger range fade? Now, I'm still, you'll notice, talking about range fading, because when you're in a range for this long, it's probably not going to break out of it right away. So every breakout attempt that does occur here on the euro, I am anticipating it to be a failure. It does appear as though the buyers have a little bit of emphasis. Now, if we zoom out, obviously, this is coming off of the backs of a very strong bear trend, and we're going into a range. One of two things is going to happen here in the next day, in the next week, in the next month, or whenever this thing wants to break out. But it's either going to break out and reverse to the upside, or it's going to break out and continue and go collapsing lower. Those are the two options that it has right now. And, you know, to be fair, looks like the buyers have the edge right now. We tried making a new low below the bottom that ended up being very, very well supported. Even broke back up and used it as support again. When it came up, it couldn't even test it. It couldn't even get that physical test and bounced up again. So there are some definite clues from the buy side that this may want to ramp up for another leg higher. Now, again, I still think it's a range, so I'm looking for the highs of the range to be an area of interest if we can get a break above this swing high here, kind of this micro double top that was put in. That's where I'm more looking for continuation up. But if we can pull back to the zone, it might be a great place for it to really start kind of lifting. Looking over, let's jump that back down to what it was. Looking over on gold, similar situation. Gold and the euro tend to move together most of the time. It's about a 50% correlation between the two. But we do have a little bit more of a bear trend. Gold is trending lower. It is showing some signs of bear continuation. The one level that we really wanted to see was right there, that little support area. They broke down, tried popping up, failed, and continued lower. And when they made that higher low, that's where I get a little bit concerned, because now all of the sentiment that was there to the downside is now broken. And we're coming back to test that area as support, but we're not finding much support here. So because of that lack of support coming in, unless this current candle over the next, 3 hours closes back above that level, this is a very strong potential sign of weakness. This appears to be nothing more than a fake break through the highs. We're looking for a corrective phase up to sell into and drive the market down. So I do like the sell side a lot more on gold. We have the trend that's going with us in our direction, which always makes it a little bit easier. But along with that, we have a complete failure from the buyers to reverse the market. They had their chance, and they let it slip through their fingers. So I am looking for the downside on gold, try to push back down towards the lows, towards at least 12.16. I would really like to see maybe even a little bit further. Drop that down, take a look at crude oil. Now, crude oil, this is the zone that we were talking about where we really wanted to see what happens. We had this major swing area here, held as resistance, very similar to the euro, actually. They tried breaking higher, no conviction, tried breaking higher, no conviction, but it kept holding. And this is the first time that when they finally had that strong breakout attempt, it completely failed and turned back around again. So when we were talking about it this morning, we had this really strong bull lift to the upside, and it looked like we might be gearing up for that rally up. We've broken through the level of resistance. We can use it as support again. We have conviction to the upside, but then it completely crapped out and came back down again. So all of that sentiment that had built on just that single bull candle, completely gone. So now we're in a situation where if this starts breaking down, and it's not going to take much anymore, it's already pinned to the lows. If this starts breaking down, that level of support can quickly become resistance again and continue to move down. If we look at the overall trend, to be fair, there really isn't one in the grand scheme of things. It's not really giving us a whole lot to work with. Now, if we zoom out a little bit further, you can see some of the previous candles there. But, you know, for the most part, it's not doing much. We have a big range starting off the highs down to the lows, up to a new high, and then back down again. This could very easily lose its grip and slide lower towards a new low. Now, of course, major support down here. at around that 63, well, we'll just say 64. Make life a little bit easy and just say 64. That's going to be the zone of support. If it does end up breaking down, that I'm looking for as a downside objective. But really the big thing that we need to see first is follow through on this bear bar. If they can close out a really strong bear bar like this, there's a good chance that they followed up with a third bear bar, and then we begin entering sell everything territory. When you have that big of a bear move down, there are going to be sellers that are looking to sell for any reason they can get their hands on, and that's kind of what I hope to see right now, because I want to see it pile drive all the way down to that 64 mark again. Crude oil is losing grip to the upside, and this certainly does not help. 3-push wedge top with a twin reversal on the highs and a pile drive all the way back down through support. It's a pretty big deal. Drop that out of the way. And then over on the S&P. Now, the S&P, for the most part, is still continuing its bull trend to the upside, albeit very weak. The buy side, it's been really choppy the last couple days. The index markets seem to be very slow. Everything is kind of grindy, not really getting a whole lot of movement one way or another. And we're seeing that again today. You know, we're in mostly a range. We've been in a range, arguably, for the last 3, 4, 5 days. We're just not getting a whole lot going on. Buyers are buying at the lows, pretty substantial amount of buying pressure down there. That's going to be at 27.91. And as long as that support maintains, even if it traps down and pops back up again, that still counts as support. As long as that support still stays put, there's a good chance that we keep this trend going to the upside and grinding back up towards new highs. The major objective is going to be back to 28.18 and see if we can break above that and continue. Otherwise, though, I mean, everything else is still looking really, really good to the upside. In the bigger picture, it's just the problem is on the faster picture, on you know, a 5-minute chart, 1-minute chart, etc. It's really, really grindy. Sorry for my dogs in the background. We've got someone coming to pick something up. But that's kind of the caveat that I'm looking at on the S&P. They're holding support. They're buying the trap lows. Now they need to follow up and break through those highs and get that continuation. If they fail that continuation to the upside, that's where we're going to run into some trouble. So I am looking for the buyers to continue just to see if they can get further breakout momentum to the upside. All right. That's going to do it for the futures markets. If you have any markets that you want me to take a look at, feel free to type those in. I did have a request to look at Bitcoin, so let me get that loaded up here. Now, Bitcoin as a whole is catching some very nice rallying to the upside. Now, keep in mind, it's still down a lot. I mean, it did put in a peak near 20,000, and it's only trading at 7,800. So from the bigger picture, yeah, it's still way, way down there. But the overall move itself, we're already in the profit objective that we talked about in our newsletter. That was that buy bounce between 6,400 and 6,000. We're in that profit-taking zone now, and we're trying to break higher. Now, notice one thing in the way. It's pretty obvious. We have a wedge top that is grinding down. And right now, we are right at the top of that. Now, not only are we at the top of the wedge, but we are also on top of the 200-period moving average. So we have another level of resistance that we have to deal with. And not only are we at the top of the wedge and at the 200-period moving average, but we're also attempting to break out of a double top area, right? We had a double top back here. They tried, faded back here, and now they're trying to break through here. So we have 3 big levels that are stacked up right now that are kind of putting in a little bit of a brick ceiling there that the market is having a hard time getting through. In all honesty, I think if we can start really catching a lift to the upside, maybe get up to like 8,400 or something, just a convincing breakout above these highs, we stand a good chance at finding that breakout pullback move for continuation higher. The next objective after that would be up towards 10,000. Of course, it is a big round number, so 10,000 is going to play a part anyway. But that's kind of what we're looking at right now. Bitcoin is doing well. It's up a good amount from those lows. I mean, if we measure this up from the $6,000 mark, which is where we were kind of looking here, to where it is now, it's up about 30%. Pretty hard to get upset with a 30% move, but at the same time, we're running into a lot of stuff up here, and if it's going to keep going, it's going to have to break out of a lot of stuff in the way to keep it going. So we'll have to keep an eye on it, but right now, Bitcoin is in a very challenging spot. If we can get a strong breakout above that, we should be looking good for more continuation up to challenge that $10,000 level sooner than later. Aside from that, you know, the other cryptos are, it's kind of interesting because Bitcoin and Ethereum tend to move hand in hand. You know, they skip down the same road at the speed, basically, and Ethereum's not doing it right now. Bitcoin is catching that really nice lift. Bitcoin's up 4.5% today. Ethereum's down 0.71%. It's very infrequent that you see those two split apart by that much, unless something is going on. And, you know, if that's the case, Ethereum might just catch up and go flying higher. But right now, Ethereum is actually staying pinned a little bit down to the lows. And same with Litecoin. Litecoin's getting stuck down here at around the $82, $83 mark and having a hard time getting anything going there either. So it's definitely an area of interest, but the big one that stands out is Bitcoin. That's the one that's doing all of the hard work right now. So again, feel free to type in any of those markets you want me to take a look at. We'll take a look at those for you. For now, I'm just kind of keeping an eye on the faster time frame, see what's going on. And we can go from there. Did you go over the NQ already? No, I didn't. I can. Generally, I just use the S&P because a lot of them stay the same, but we can take a look at the NQ. Is there a time frame that you wanted me to cover for you? Like a 4-hour chart, 5-minute chart, etc.? I mean, looking at the bigger trend, you know, like a 4-hour chart, it looks really, really similar to the S&P. You know, we've got a good amount of bullish continuation to the upside. Everything looks pretty good. I think the big area that I would really want to see on the NASDAQ is a trap below the swing low, right? I want to see a trap below that area, and I want to see them reject it. And really, the big thing that I want to see, in the reason why I want to see that failure, is because that would really cement the buyer's emphasis, right? Right now, we're just kind of in the middle. We're not really going higher. We're not really going lower. We're just kind of messing around, especially in here. This is a train wreck. So the overall movement that we have going on right now on the bigger time frames, I think we need to push a little bit lower to get a strong level of support or break out of the highs to really prove that the buyers are, you know, swarming back in. Now, on MetaTrader, I don't have access to volume charts, but a 1-minute chart should be relatively close for the general trend of things. And right now, you know, we started off the day with a really funky move. We had a pop to the upside, breaking out of the pre-market highs, and then rolled all the way back over and collapsed on the open, just to find failure on the lows and turn all the way back up again. And a lot of times, when you have a situation like this that starts the day off, with a, you know, you hit the open, rallies up to a new high, pushes down to a new low, and then goes all the way back up to a new high again, chances are very high that this point becomes the low of day. And we probably won't see that again today. There's a 90% plus chance that that is the low of day, and we won't ever come back. Now, just because it's the low of day doesn't mean that this is going to keep going up, but what that does mean is we're probably not going to come back down to here, and a very high probability of that being the case. So because that is the case, this low is a very strong anchor point for any wider stops. Maybe you're taking a swing trade as an example. Very likely that this low stays intact, so a stop below that should be very, very safe. If you're looking for some shallower moves, because this is a 1-minute chart after all, that does also mean that continuation to the upside would likely occur when we start finding some other trapping zones. Since we have such a strong level of support down here, it would then go along with that same train of thought where all of these subsequent confirmed swing lows become levels of support, and they become really big hot spots of trend buying, right? A continuation buy. Because a lot of traders who already bought in, whether they bought in here, or heck, even here, they're going to be trailing their stops along with the move, and they don't want to see these swings broken. Well, institutional traders know this. It's a really obvious place. I can see it on the chart. Pretty obvious that there's going to be a stop there. Those zones become huge hotspots for absorption buying, meaning that when it comes down to it, it triggers in all of the trend traders' sell stops. And what are they doing? Well, they're selling to an institutional buyer who's just accumulating them all up, and they're looking for a retest of the highs. So for me, on the NASDAQ, I'm looking for a trap below this double bottom here as the hotspot of support, and that comes at around 63 1/4. So that's going to be the area that I have the most interest in right now, is a trap down to 63 1/4, 63 1/2, and then look for a rally back up towards the highs. Maybe a shallower high just to play it safe. But that's the game plan right now for the NASDAQ, given the amount of strength that's coming in so far at least. Yeah, no problem. All right. I didn't see any other questions coming in or any other markets. Not a problem. So that'll do it for today. As always, if I missed any of your questions, feel free to send me an email, jbrink@slingshotfutures.com. Underneath the video, click on subscribe, click the notification bell icon so you're notified every time we go live and so you don't miss any of the videos that we post. But aside from that, you know, as long as you stuck with the plan and played it a little bit patient, and it was kind of slow, played it a little bit patient, you should have done all right. If you didn't have any trades today, I could see that as well. But either way, like we always say, it doesn't matter what market you're trading. Always, always, always make a plan, trade the plan, follow those rules, and be a-okay. Until next time, enjoy the rest of the day. I hope you have a great trading day tomorrow and later today if you're going to keep trading. Otherwise, we'll see you all back. Not tomorrow, actually. I'm going to be gone tomorrow. I've got some contractors coming over to the house. Not going to be able to do much there, but we'll see you all back on Wednesday. So have a good one, and we'll see you all later. Thanks.